Welcome back, and joining us now on the show is Chirag Sheth. He's Principal Consultant South Asia at Metal Focus. Chirag, hi, good to have you. We've seen a constant decline continuing for the gold and silver prices, making lower lows rather on the charts. And I'll start with gold first. And we've broken below $1,830 per ounce as well, from 1960 off a high in the month of Jan to where we are trading right now is nearly $100 plus kind of a decline. And with the markets looking at strong US economic data and the fact that there could be further rate hikes is what really seems to be bothering this sector. What is your expectation, one, on the dollar index, and two, on where the gold prices could go?
So, Manisha, as you are aware, we were a bit surprised with the kind of rally that we saw in Jan and, essentially December and Jan. But we've been saying that, probably market is pricing a bit ahead of itself, given the fact that they were expecting, Fed to cut aggressively this year. Whereas, the Fed posturing was very much towards the fact that they would look at data and then take a call. So now what is interestingly happening is that the entire trade of January and December is getting unwounded. You have a situation where the market is now trying to price in, as you mentioned, probably two rate hikes. More and more banks are now saying that, there is a possibility of two rate hikes this year, and then Fed would hold interest rates. So our sense is that, prices are still elevated. They should head lower by the end of the year, and we could easily see, a sharp decline starting maybe, April, May 2023.
And what kind of a sharp decline are we anticipating? What kind of levels are you targeting by the end of this year?
So we believe, Manisha, that prices should ideally trade below $1,700 for this year. We could easily see $1,650, $1,600 kind of range, by end of the year. However, most likely $1,700 should be breached. Given the fundamentals that are now shaping, positive economic data, that gives ammunition to Fed to hold interest rates. And I think if that happens, then you will see, case for gold weaken further.
For the Indian markets, Chirag, what would those calculations be? Because we're looking at 82 to 83 kind of rupee holdings as of now. Are you putting any calculations, number out for the Indian rupee too?
So, we don't do rupee forecast, but in a sense, our sense is that the kind of rupee depreciation that we saw last year, that may not be the case this year. We do not see rupee depreciating, quite significantly in that sense. However, what is likely to happen is that the gold weakness and rupee holding steady could actually bode well for the Indian market.
How about silver then? And we've seen prices decline on that one also quite sharply. For the Indian markets as well, it has been nearly 3,000 to 4,000 rupees of prices coming off from the kind of highs that we already made for 2023. 24.5 for silver, and then to 21.5 is where we are trading. What's your sense on this one?
So again, for silver, we believe, Manisha, ideally the price range should be anywhere between $18 to $19. You look at, demand has come to a standstill in Indian market, which was last year by far the largest demand market for silver. Demand has completely come to standstill. Our discussions with traders say that there is at least, 700 to 800 tons of silver lying in various warehouses. So in a sense, if silver, prices we expect to come down to $19 to $18, and then demand will kind of see a recovery.
Are you seeing any festival buying at all, or the wedding season that is ongoing? And with the kind of decline that we are expecting in sense of prices, do you see that supporting demand?
See, if we look at demand comparatively from Jan to Feb, then yes, there is a bit of recovery which has happened. But if you actually look at on a comparative, on a year-on-year basis, at this moment, demand is weak compared to last year. However, there is a bit of pickup in demand when you compare it on a Jan to Feb basis.
All right, Manisha, thanks a lot for that. Thank you, Chirag, for joining in and giving us those details. In fact, two rate hikes is what the street is factoring in right now. But the market's doing just market things. Moments ago, the Nifty was in the red, and now it has moved into the green, and that's been led by the Nifty Bank, where has been